very easy to get caught up in the excitement of trading. You know that rush you feel when you see a big potential winner. I've been there, you know, seeing the signals pop up and it's jumping at it even though it wasn't the perfect setup. It's like the market is a big casino and I'm placing my bets hoping to win the jackpot. But trading is not gambling, and this mindset can and will create a lot of problems for you. What's up everyone, and welcome back to the channel. Today I'm going to share something personal, something that I've been struggling with in my trading lately, and I believe many of you might relate to this as well. It's about approaching trading with a gambler's mentality, taking trades that you know you probably shouldn't take. In this video, I will talk about what has helped me in these scenarios. I recall many different scenarios where I've acted on a trading signal despite noticing that that setup was not ideal. The anticipation of a winning trade and the fear of missing out on a potential big win made me take the trade anyway. But more often than not, these impulsive decisions have led to losses, hurting not just my capital, but my confidence as a trader. Over time, I realized the importance of discipline, waiting for the right setup and understanding that not every signal is worth acting upon. It's about quality over quantity, about being patient and disciplined, traits that are the opposite of a gambler's impulsiveness. So how can we combat this gambler's mindset? First of all, you want to arm yourself with knowledge. Understanding the market, analyzing past trades, and learning from your mistakes is crucial. This is where backtesting and journaling comes in. And of course, practicing mindfulness is very important because it can help you keep your emotions in check, allowing for more rational decision making. What I do is I try to focus a lot on trying to identify my own feelings and emotions while trading to make sure I don't let negative emotions like stress affect my decision making. Another thing to consider is having personal mantras that can serve as a grounding reminder of your trading principle. Repeating this mantra daily or during your meditation session can help internalize a disciplined approach. For example, a mantra like discipline and patient can be a simple yet very powerful reminder. And then we have sticky notes. If you've been following me for a while, you know that I love sticky notes. I have my screens just covered in sticky notes, and having these notes on your trading screen with reminders based on your mantras like wait for the right setups or avoid acting on impulses can serve as great visual cues to stick to your trading plan. It's a great reminder in the middle of trading to take a pause and reflect on what's really going on in your mind. And then of course, something that I think is very important is trade journaling. Now you need to take some time out of your week, probably on weekends, to review your past trades and see if you might find a pattern. Because when you do take a new trade, you're supposed to write down all your notes about your mental state of mind. So for example, last week I took 2 trades where I noted in my journal something doesn't feel right. I've had a bad night's sleep. I'm feeling a bit stressed. There's something about this setup that I don't like. Maybe I shouldn't take the trade. But of course, I went ahead and took the trade anyway. And guess what? I got 2 losses from that. Now, what you will observe is a pattern where those feelings usually lead to losses. That's when you know that that is going to be a part of your mental edge. You're not supposed to take trades while experiencing those emotions. And before I wrap this up, remember that the technical aspect of trading is actually quite simple. You create the system, you receive signals from that system, and then you execute. It's what happens between the time of entering the trade and exiting the trade where most of the mistakes are made. And most of those mistakes are based on mental errors. So you can look at trading as 25% technical analysis and 75% trading psychology. Therefore, learning to identify and managing your emotions is the #1 focus for every aspiring trader out there. Thanks for watching the video, guys. Now, if you like the content, please consider hitting that like button and subscribing to the channel. Now, also let me know, please, in the comments if you do have any similar issues like the one I described today. All right, guys, thanks for watching again, and I will see you guys in the next video.